Okay, let's unpack this. We're diving into a specific segment of the personal care market today.
Yep.
Caffeine conditioners. Now, you might hear that and think, well, niche, maybe.
Right. Seems specific.
But the numbers we're looking at, they tell a completely different story.
They really do. Our source for this deep dive is some detailed market data from Cognitive Market Research.
Okay.
And they've analyzed the global landscape, region by region. Our mission is pretty simple, really, to pull out the most important nuggets from all this data so you can quickly grasp the true scope and, frankly, the incredible growth path of this market.
Think of this as your fast track, then, to understanding why caffeine in your conditioner is becoming, well, such a big deal globally.
Exactly.
Let's maybe start with the big picture view.
Okay.
The overall global market size.
Okay. So globally, the total market, it was just over $1 billion back in 2021.
The billion, okay.
Yeah, 1,033.91 million to be exact. And the projections, they show it hitting around $1.4 billion by 2025.
And looking further out, say, to 2033.
Well, the forecast then is for the market to reach well over $2.7 billion.
Wow. Okay, so that's a really significant leap in just over a decade.
Absolutely. That kind of jump, it translates to a compound annual growth rate, CAGR, of 8.408% over that period.
8.4%.
Yeah. And what's fascinating here is that this isn't just like steady incremental growth.
Right.
For a product category that started relatively small, this really points to a genuine acceleration, rapid expansion worldwide.
Okay, so that's the global picture, a market set to nearly triple. Impressive. Now, let's zoom in a bit. The regions. Where is this growth really concentrated? Maybe start with North America.
Sure. North America is actually the largest regional market currently.
Okay.
It was valued at over $400 million in 2021, $407.361 million. It's projected to grow to over $540 million by 2025.
And by 2033?
It's expected to reach nearly $1 billion, $980.667 million.
So North America remains the heavyweight then, and its growth rate, the CAGR.
It's solid, 7.572%.
Okay. How does that break down when you look at the individual countries, U.S., Canada, Mexico?
Right. So within North America, the United States is, well, it's the dominant player just by sheer market size.
Makes sense.
Started over $311 million in 2021, forecast to reach over $723 million by 2033.
And its CAGR?
It's 7.248%.
Mm-hmm.
So slightly below the regional average, but I mean, given its scale, that's still massive growth in dollar terms.
Right. The base is huge. What about Canada and Mexico?
Canada is also a substantial market. It's growing from over $68 million in 2021 to projected figures, north of $175 million by 2033.
And its growth rate?
The CAGR there is 8.11%, so actually growing a bit faster than the U.S. market.
Now, here's where it gets, well, really interesting in North America looking at these numbers. Mexico. It's the smallest market in the region in 2021, starting around $27 million, right?
That's right.
But it's projected to nearly triple to over $81 million by 2033.
Exactly. And this kind of raises an important question, doesn't it? Why the faster growth in Mexico?
Yeah, what's driving that?
The data shows its CAGR is 9.501%. That makes it the fastest growing market within North America.
Wow.
And when you see a smaller market showing that kind of acceleration, it suggests something specific is resonating there, maybe new product introductions or, successful marketing or just a specific consumer demand being met really quickly.
Definitely one to watch within the region then.
For sure.
Okay, let's move across the pond. Europe. How does it stack up against North America?
Europe is the second largest market for these caffeine conditioners.
Okay.
It was valued at over $281 million in 2021, and it's projected to reach just over $710 million by 2033.
And the growth rate there?
The European market overall shows a strong 8% CAGR, so just a bit ahead of North America's regional rate.
Interesting. And when you break down Europe, which countries are really driving that? Germany? UK?
Yes, the data points to several key markets. Germany is the largest by value, started over $62 million, heading towards $150 million.
Big market.
Yeah. The UK and France are also significant. The UK started near $50 million, projected to more than double to over $112 million. France growing from over $38 million to over $86 million.
And we also see pretty strong contributions from Italy, Russia, Spain. They all seem to be starting in that $20–25 million range. back in 21.
That's right. And they're all forecast to more than double by 2033, reaching well into the, 50s and 60s of millions. Solid growth across the board.
Anything else stand out in Europe?
Well, what's particularly interesting in the European data is the rest of Europe segment.
The aggregated bit.
Exactly. While it's an aggregation, its projected growth rate is actually the highest in the region, over 10%.
Over 10%. Wow.
Yeah, 10.221% CAGR. It suggests the trend isn't just confined to the major economies, but it's spreading pretty rapidly into other European countries too.
So it highlights the broad appeal this product type is finding across the continent.
Precisely.
Okay, let's pivot now to Asia Pacific. That region's known for its dynamic beauty and personal care market, right?
Oh, definitely. And Asia Pacific really stands out in this data for its growth speed.
How fast are we talking?
Well, the regional market was valued at over $223 million in 2021. It's projected to leap to over $700 million by 2033.
$700 million.
Yeah. The source actually describes this as stellar growth.
That's stellar.
And the numbers back that up. The regional TAGR is nearly 10%, 9.982% to be precise.
That is fast growth. Which countries are leading the charge there? China, I assume?
China is the largest market by value in APAC, yes. Started at nearly $78 million, forecast to exceed $260 million by 2033. Japan's another major player, growing from over $45 million to over $123 million.
But the data highlights India as the standout.
That's the term used, yeah. And for good reason. While it started smaller, just under $25 million in 2021, it's projected to explode to over $90 million by 2033.
Wow, and the growth rate.
India's market is posting the highest TAGR mentioned anywhere in the source material, an exceptional 11.333%.
Over 11%.
Yeah. That kind of rapid acceleration just suggests incredibly strong consumer adoption and market penetration in India. It's a market that's clearly embracing these caffeine conditioners at a much faster pace than its regional peers.
And we also see solid growth across other APAC countries, like South Korea, Australia, Southeast Asia.
Absolutely, all showing significant expansion from their 2021 figures. They're becoming multi-million-dollar markets by 2033, South Korea heading towards $57 million, Australia over $50 million, Southeast Asia almost $68 million.
So the APAC data really underlines how quickly a product trend can gain massive traction, especially in those big dynamic economies like China and India.
No question. And nearly 10% regional CAGR is remarkable on its own, and India's individual rate is just a clear highlight.
Let's look at South America next. What's the picture there?
South America is also showing strong expansion. The regional CAGR is almost 9%, 8.893%.
Pretty solid.
Yeah. The market grew from over $55 million in 2021 and is projected to reach over $155 million by 2033.
And Brazil leads the way there. Brazil is the largest market within South America, yes. Growing from about $23 million in 2021 to over $69 million by 2033.
Okay. And Argentina, Colombia.
Also significant contributors.
Yeah.
Argentina projected to reach over $27 million, Colombia over $22 million by 2033. Both starting from, smaller points.
And the data for Peru and Chile
Also shows strong percentage growth, both moving from around $5 million in 2021 to over $12 million by 2033. So it highlights that this isn't just concentrated in the very largest South American economies. It's broadening out.
Good point. Okay, on to the Middle East.
The Middle East market also expanding rapidly. It's got a CAGR of over 9%, 9.124%.
That's another fast grower.
Yep. Climbed from over $38 million in 2021, projected to hit over $106 million by 2033.
And Saudi Arabia leads there.
Saudi Arabia leads the Middle East in market size, yeah. Growing from over $14 million to over $41 million.
Okay. Turkey, UAE, Egypt.
Also key markets, each growing from starting points between, say, $5 million and $8 million in 2021 to projected values between $15 million and $21 million by 2033. And Qatar is mentioned specifically.
Yes, Qatar is noted in the data as showing high growth.
Interesting, smaller base.
Right. Started at a smaller base, just over $2 million in 2021, but it's forecast to more than triple to over $7 million by 2033.
So similar to Mexico and North America, maybe? Smaller market, faster acceleration?
Could be. Suggests specific factors are driving quick adoption there, too.
Right. Finally, let's touch on Africa.
Okay. The African market for caffeine conditioners, it expanded from just under $28 million in 2021, projected over $70 million by 2033.
So more than doubling.
Definitely. While a specific CAGR for the region as a whole wasn't explicitly stated in the source we have, the growth trajectory is clearly positive and significant.
And within Africa, South Africa, Nigeria.
South Africa is the largest listed country market in Africa in this data, rises from over $11 million in 2021 to over $26 million by 2033. Nigeria also shows strong growth, moving from nearly $8 million to over $20 million.
And the rest of Africa segment.
Similar story to Europe. It shows the trend extending beyond just those individual listed countries, growing from over $8 million to over $23 million, so indicating broader market penetration across the continent.
So, okay, bringing all these numbers and regions together, I mean, we've gone around the globe here. What's the main headline message from this data?
Well, I think the key takeaway is really unmistakable. When you look at these growth figures from North America and Europe to the really rapid expansion we're seeing in Asia Pacific, South America, the Middle East, and Africa,
Yeah.
the picture is incredibly consistent.
So this isn't just a product selling well in like one corner of the world.
Precisely. The data from cognitive market research makes it crystal clear. The caffeine conditioner category is, well, it's far from being a niche product anymore.
Right.
That's the goal.
Well, our thanks again to Cognitive Market Research for providing the data that allowed us to do this deep dive.
Yeah, absolutely. It's truly fascinating, isn't it, to see how specific ingredients can power such, well, explosive growth across such diverse global markets.
It really makes you consider the journey of consumer product trends. Caffeine and hair care. It's clearly having its moment now. But what other, seemingly niche ingredients might be poised to experience this kind of widespread rapid expansion next? Something to ponder, maybe, as you look at ingredient lists in the future. Welcome to our deep dive.
Glad to be here.
So, the idea today is simple. We take a whole pile of source material, articles, research, maybe even your own notes, and we really pull out the key stuff.
Yeah, the insights that matter, the surprising links you might miss otherwise. We try to cut through all the noise for you.
Exactly. And today, we've got two topics that, well, seem pretty far apart at first glance. On one hand, this really booming market for caffeine conditioners.
Yeah.
In personal care, like for your hair.
Yep, caffeine moving beyond the coffee cup.
And on the other hand, something much bigger, much more disruptive. The major impact of the 2025 global tariff surge.
Big economic shifts, yeah. Turbulent stuff.
So our job today is to connect those dots. How does huge global trade policy, tariffs and disputes actually end up affecting that specific bottle of conditioner you might see online or in a store?
Right. We're drawing on some deep industry analysis here, including insights from cognitive market research to sort of map that connection.
It's going to be a look into that really fascinating, maybe sometimes bumpy intersection between what consumers want and, well, how the global economy actually works.
Let's dive in.
Okay, so let's start with the hair care side. Caffeine. It's not just for your morning brew anymore, is it? Suddenly it's this like hot ingredient in conditioners.
It really is. And it's happening because consumers are shifting their focus. People are way more clued into scalp health now.
Oh, right. Less about just shiny hair, more about the roots.
Exactly. Concerns about thinning hair, wanting to know exactly what's in their products. Transparency is huge. They want stuff that actually works, functional ingredients.
And caffeine fits that bill somehow.
Well, that's how it's being positioned. The idea is it might, potentially stimulate hair follicles, maybe boost circulation around the scalp. So it sounds functional, performance-driven.
Interesting. So what are the main things pushing this trend right now? Why caffeine? Why now?
It seems to be a few things coming together. First, like we said, consumers are just more knowledgeable. They read labels, they Google ingredients, they're looking for things that sound effective, maybe a bit sciencey.
Okay, and that fits with that whole natural and functional personal care boom we're seeing everywhere.
Perfectly. The source material points out the natural hair care part of the market is growing at over 6% CAGR compound annual growth rate. Pretty healthy growth year on year.
Wow.
And caffeine conditioners are sort of riding that wave. They're presented as both, kind of natural adjacent, but also delivering a specific function.
And you can't ignore the whole online world either, right?
Oh, definitely not. Digital marketing is massive here. You've got influencers, TikTok, YouTube, Instagram talking it up.
Dermatologists maybe mentioning it.
Exactly. Dermatologists, even celebrity endorsements. That all builds trust, creates buzz, especially, with younger demographics.
Okay, but when something grows this fast, there are usually some hurdles, right? What are the challenges facing caffeine conditioners?
Yeah, there are definitely bumps in the road. One big one is, well, the scientific backing isn't quite as solid, or at least not as widely accepted as it is for some other ingredients.
Like what? What are we comparing it to?
Well, think about things like minoxidil, which is, FDA approved for hair loss, or even niacinamide, which has a fair bit of research behind it for skin and scalp health. Caffeine studies show promise, sure, but maybe not that same level of validation yet.
So some doctors or, really informed consumers might be a bit skeptical.
Exactly. Leads to a bit of skepticism. Then there's the price.
Ah, yeah. These often seem kind of pricey.
They do. The formulations can be complex. The branding is often premium. That makes them more expensive. And that's a real barrier in, say, parts of Asia or Latin America where people are more price sensitive.
Right. Affordability is key in many markets.
Definitely. And then you've just got loads of alternatives already out there.
True. Like biotin, keratin.
Biotin, keratin, argan oil, niacinamide again. Things people already know, trust, and can often get cheaper. So it's pretty easy for someone to try caffeine conditioner and then just switch back if they don't love it or if it feels too expensive.
Okay, but the market's not standing still. How are these brands adapting? What are the sort of evolving trends here?
We're seeing a lot of innovation, actually. Product diversification is key. Brands aren't just selling only caffeine conditioner.
They're mixing it up.
Yeah, creating these hybrid formulas. They're combining caffeine with other popular ingredients. Think castor oil, peptides, niacinamide to tackle multiple issues at once.
So like one bottle for hydration, maybe dandruff control, and stimulation.
Exactly. Multitasking products. Another big trend is direct-to-consumer, DTC.
Selling straight from their website.
Right, bypassing the traditional stores. And subscription models, too. So new brands can reach you directly, maybe offer personalized routines, get that product delivered regularly. That builds loyalty. Plus, they get amazing data on what customers like.
Smart. And looking ahead, where's the big growth expected?
The sources point strongly towards emerging markets. Huge potential seen in places like India, Brazil, Indonesia over the next, say, 5 to 7 years.
What's driving that?
It's a mix of things. More people moving to cities, rising middle-class incomes, so more disposable cash, and just better access through local e-commerce platforms and more stores carrying these kinds of products.
Okay, so that's a pretty clear picture of this, like, niche personal care trend. But as you said, it doesn't exist in a bubble.
Not at all.
Let's shift gears hard now.
Yeah.
Let's talk about that massive disruption, the 2025 tariffs. This sounds serious.
It is. It's a major jolt to the global system, affecting pretty much every sector. We're talking about a broad set of new import duties the U.S. put in place earlier this year. The source material refers to them as the Liberation Day tariffs.
Right. And according to the sources, what were the stated reasons for doing this?
The goals mentioned were things like reducing the U.S. trade deficit, trying to encourage companies to manufacture more goods domestically by making imports more expensive, and ultimately trying to force a rearrangement of global supply chains.
The scale sounds massive. What kind of numbers are we talking about based on the source info?
They're significant and really broad. You saw a 10% tariff slapped on imports from the UK and Australia, a huge 46% on goods coming from Vietnam, a general 34% on many products from China.
Wow, 46% on Vietnam is huge.
Sure.
And raw materials.
Not spared either. A 25% blanket tariff hits steel, aluminum, and auto parts. And as you might expect, this really cranked up the heat on the U.S.-China trade situation.
Especially given that trade imbalance.
Right. The source mentioned China's trade surplus with the U.S. was around $102.6 billion as of March 2025. So these tariffs landed right in the middle of that ongoing tension.
And actions like these usually trigger reactions, don't they?
Almost always. And they did. We saw significant retaliatory tariffs from China. The source mentions figures up to 145% on some specific U.S. goods. Ouch.
145%.
Yeah. And other major partners like the EU and Canada also brought in their own retaliatory measures. Now, it's really important we stress here, we're just relaying what's in the source material. The policies, the stated goals, the reported numbers, the impacts. We're not taking a side on whether these policies are good or bad, just outlining the information provided.
Understood. Okay, so you have this global tariff storm brewing. How does that actually filter down and affect everyday consumer goods? And bringing it back, products like our caffeine conditioners.
Well, the impact on consumer goods overall is substantial. The source gives examples. Tariffs hitting things like apparel and footwear at 25%, household appliances around 20%, Even packaged foods and beverages seeing tariffs of 10–15%.
Okay, but a bottle of conditioner isn't apparel or an appliance. Are they getting hit directly?
Not always directly on the finished product itself, no, but they are definitely feeling the pinch through the supply chain. That's the key.
How so?
It's the rising cost of imported ingredients. Think about specialized extracts, unique fragrances, the active components like caffeine itself if it's sourced internationally, and packaging too. Plastic bottles, pumps, caps if those are imported, their costs go up because of tariffs on plastics or metals.
Ah, okay. So it's the bits and pieces that make up the final product, the upstream costs.
Exactly. So companies suddenly face higher costs for the stuff they need to make the product. That squeezes their profit margins. They're also dealing with delays. Maybe their usual supplier is now too expensive, or the shipping routes are disrupted.
So what do they do? What are the choices?
Difficult ones. Maybe they try to find a supplier closer to home, like in North America, but that might be more expensive initially or take time. Maybe they delay launching a new product because they can't get the packaging reliably.
Or change the formula?
Or change the formula to use cheaper, maybe domestically sourced ingredients, which could affect performance. Or the option nobody likes, they raise the price for you, the consumer.
You mentioned smaller and mid-sized brands earlier in the context of caffeine conditioners. How does this tariff situation hit them specifically? They seem more vulnerable.
They absolutely are, disproportionately so. Big companies often have deeper pockets, more diverse supply chains already set up. Smaller brands, they have less capital to just absorb these higher costs.
Right.
They might rely heavily on one or two overseas suppliers for that unique ingredient or that specific type of bottle. So they face really brutal choices. Do they hike prices and risk losing customers who just discovered them?
Or cut back.
Or cut back on the number of products they sell? Reduce their SKU count, simplify their range, or worst case for their brand image, maybe they're forced to compromise on the quality of ingredients to keep costs down, which kind of undermines why people liked them in the first place.
Yeah, none of those sound like great options if you're trying to build a brand based on, say, natural efficacy.
Exactly. It's a really tough environment for them.
So, okay, you've got this complex picture. Specific consumer demands, like for caffeine conditioners, happening at the same time as these huge global trade shocks. How are businesses big and small actually trying to navigate this? What strategies are working?
This is where things like market intelligence become absolutely crucial. It's not just a nice to have anymore, it's about survival. Research, like the kind cognitive market research provides, becomes essential.
How does that research help, practically speaking, in this kind of chaotic environment?
It provides clarity in the chaos. It helps brands map out their entire supply chain. Where does everything actually come from? What are the hidden risks?
Like geopolitical risks.
Exactly. Evaluating the stability and tariff exposure of their current sourcing countries. Then it helps identify and properly check out new potential sourcing regions. Maybe Vietnam is too expensive now with the 46% tariff, so perhaps Mexico, or even looking at reshoring back to the U.S., although that has its own cost implications.
So, mapping the supply side, what about the customer side?
Just as vital. Research helps figure out how sensitive customers actually are to price increases. If costs go up 10%, can you pass that on? Or will sales plummet? Running models to predict how different tariff scenarios might impact their specific business.
And helping them maybe change the product itself.
Yes, critically. Informing product redesign. Can we reformulate using different ingredients that cost less or are sourced locally without wrecking the product's appeal or effectiveness? Can we change the packaging to be cheaper or lighter? It's about finding savings without sacrificing the brand.
Does the source material give examples of what big companies are doing?
It does. It mentions giants like Nike and IKEA making really significant investments to diversify where they make things, building new factories in multiple places, Vietnam, India, Latin America, so they're not reliant on just one region.
Spreading the risk?
Precisely. And adopting strategies like in-market for market, making goods closer to the customers who will buy them. That cuts down on shipping and tariff headaches.
Any other strategies standing out?
Yeah, leveraging technology is huge. Using AI for better demand forecasting, so you don't make too much or too little inventory in uncertain times. Pushing for much more transparency from all their suppliers, knowing exactly where everything comes from.
And maybe simplifying things.
Definitely. Product simplification. Reducing the number of different items they sell, SKU rationalization to make the supply chain less complex. And investing in automation in factories and warehouses to manage costs.
It sounds like it all comes down to being incredibly aware of your customer, your product, your entire global supply chain, and being ready to pivot fast.
That's exactly it. Adaptability, but adaptability powered by really good intelligence. That seems to be the key takeaway.
So whether you're just someone curious about that new conditioner on the shelf, or you're running a business trying to deal with these huge global shifts,
The message from the sources is pretty clear. You need to be adaptable, you need good information, and you need to be strategic to survive, let alone thrive, in this kind of environment.
that really does paint a complete picture. We started with, a specific hair care trend and ended up deep in global economics and corporate strategy. It really shows how linked everything is.
The ripples spread far and wide, no doubt.
So maybe here's something for you, our listener, to think about as you go about your day. In a world where the cost and even the ingredients in your shampoo or your phone or your furniture can be directly influenced by global trade policies and supply chain decisions made continents away. How does knowing a bit more about the why behind these shifts change how you think about the things you buy and maybe the companies you decide to support?
Yeah, definitely something to mull over next time you're browsing online or walking down the aisle.